Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. So we're trying to get a bull market going, and the problem we're having is it doesn't really want to cooperate just yet. So I've called this market trickiness here, and the reason is we've got some parts of the market working really well and other parts of the market not really moving or moving down. And the problem we're having is that the indexes mask a lot of what's going on underneath the surface. So we're going to try and talk a little bit about that today. So we've got this split market. The large caps seem to be drifting slightly lower. Oil flew above $80. It was over 82. No one believes it yet, which is quite interesting. I think Jim Cramer's called the top again on oil now that it's over 80. I think he called the top at 75 and whatever. The hard part is for most people, they don't really understand what's going on in the oil market, I think is the bigger issue. And lumber has been going higher and the stocks are trying to follow it higher. So we'll see if they're actually able to do that. I'm going to spend the majority of the time on the split market up here at the top and then briefly touch about lumber if we get time at the end. So what I want to cover off the most, one of the things I think is the most important here is just to understand the backdrop. So my strength indicator that I created to help me understand the market. The idea being when it's really bullish, it'll be in a strong uptrend and we can get on board with it. Well, since May, and that was when oil kind of topped out the first time, and then some of the tech stocks started to rally in May. But interestingly enough, it was kind of sporadic, and we had this split market where no longer was everything rising together. It was a real bifurcated market where commodity related stuff was rising or was falling and the tech stocks were rising, and the US dollar was also rising, which was interesting. So now what we still have the US dollar rising, but in this case we're starting to see some of the large caps. So here's the large cap index and here's the Nasdaq, and yet the Russell basically is tracking sideways. So that provides us a little bit of a clue that the market isn't following the large caps anymore. But the other thing that other stocks aren't following the large cap indexes anymore. But one of the problems I'm starting to get worried about is my strength indicator. And I'm just starting to get worried about this now. I actually thought we'd be able to rally here after the third or fourth week. And I don't want to get too negative because what we saw in 2020 was that the market had pulled back towards the end of October and then literally like a fuse lit and took off. And there was a whole bunch of things in there. There was a Fed meeting, there was an election, there was the vaccine announcement, and the market really took a big transformational shift. We don't have two out of those three catalysts. We don't have an election and we don't have the vaccine promise coming at us. So one of the only things we've got is the Fed. And really, interest rates have changed a lot since the Fed talked in the middle of September. And the big problem is we're not getting any my long-term indicator is staying flat. And so my short-term indicator is starting to rally above 25%, which is what this blue line represents. So here's 25%. And on the red, the SSIQ, these two are very fast indicators calculated differently. But again, the idea behind them is to try and say when this moves above 25%, I want to start to get long, and then in stuff that's working. And then hopefully we get the SSIH to kind of gather up speed and start our next market rally. So the problem is we're stuck here and we really haven't been able to break out of this very low level of participation, and the indicator can't go negative. It's not like crude oil. It can only go negative. It can only go to zero. But we got down to 3% in here. And the real issue I see is we are struggling to get any upside momentum built at all, and other than very short time frame stuff, we're just not seeing it. So that's my first perspective. Now the second is here's the Nasdaq Composite. I'm just on the gallery view for the Nasdaq Composite. And what you see here is we fell down, we broke this kind of downtrend, we rallied for what, 2 days, basically broke out of here, and it's been down ever since. And so that's a bit of a problem for us, is that we've really only had, well, 2 hours of rallying since we broke that downtrend. We had 1 hour in here, but it barely got us back above the prior day. So we continue to leak lower, and we just don't seem to have any upside momentum. When you slide up to a daily chart, we've broken the big uptrend, and now the question is, well, not the big uptrend, kind of a shorter term uptrend here from mid-month or mid-spring, and then we've broken this down in kind of two legs, so 1, 2, and now the question is, do we bounce and go higher out of here? And obviously that's what we're all looking for. We haven't got it yet, so we're still watching that to see when it's going to start to show up. When we go look at the bigger picture, the weekly chart, we're sitting right on the 40-week moving average, and again, typically that's support in a strong uptrend, and back in 2018 we broke that to the downside, and obviously in 2020 we gapped below that 40-week and then spent 2 weeks going lower and then moved higher. So the real problem as we work towards this here is we're getting down towards this 2% level, and with the work of some of the people who follow my work, we talked about this as being an interesting area, and one of their suppositions was that when you get below 2%, that's when the market can really get weak. And so we're sitting at 2.2 here. Just want to be aware that this is starting to get too long in the tooth, and we don't really want to see it decline a whole bunch more. So that's, you can have two different types of corrections, a time correction or an actual price drop correction. The biggest thing I'm seeing is no real upside momentum, and so that's starting to worry me. And we're now starting to get to the point where the Nasdaq, if it literally broke down any more compared to the S&P 500, would be at new 5 or 6 month relative strength lows. That's a pretty big deal. Normally, we're not doing very well when the Nasdaq is underperforming on a 6-month basis. So those are kind of the hurdles that we've got set up. Now, how does that look on a few of the other charts? And I've got a whole area of the charts I go through each week called breadth. But the one thing I will show is that the Nasdaq advanced decline line continues to slide. It's not getting worse, but it's not getting better is the real problem. And so since the decline started, we really haven't rallied enough to make higher highs or higher lows yet. We're just kind of basically wobbling along here, and we want to watch and see if that can finally improve. I will say that the sentiment isn't very negative, because the advanced decline, this is a 2-week moving average, shows a little bit negative, but nothing really sour. Now, when we go to the New York Composite, it's a little bit better. It's actually trying to break out to the upside here, but we're still not making higher highs on either the advanced decline line or in the price action. Now, should we suddenly turn up here, let's say on the bank earnings from JP Morgan and some of the banks, maybe that'll help get us started. But so far we haven't seen that. Now, we have a couple of other ways to look at this, and one of them is the McClellan oscillator. And the concern I have here is that we're below zero, and typically when we get down below zero, this can be a race card to significantly lower levels. I don't want that to happen, obviously. We're barely above zero, so what happens is this McClellan oscillator oscillates above and below, and then up at the top, this summation index summarizes, I'll call it accumulates this data to make this chart up here. But the real issue is we're spending more time on the bottom half of zero than we are on the top, and so the chart is sliding down lower. That's not really a good look. So we're trying to make a bottom down here. We haven't really dropped at all in the last 4 weeks. The issue is we haven't started to push higher. Now, on the Nasdaq summation index, we're down around minus 300, and the Nasdaq can be a little worse. But if we just look across this level, this is really typically a bounce level down here at minus 200 or minus 300. And if we can't hold there, most of the bigger corrections that we've had, I'll say 2015, 2016, 2018, and 2020, those corrections happened once we kind of got below the 300 level. Now, we did have a period in 2014 where we had a couple of stabs below and the market corrected slightly, but nothing really major. So those are kind of exceptions. We also had quantitative easing. I think we called it in QE infinity at the time. So that might have also been one of the reasons why it didn't really break down. So another issue that we've got is when we go to the bullish percent indexes, and I just want to explain this. What is a bullish percent index? First of all, you have to define a group, and in an example, a group could be the Nasdaq 100 stocks, it could be the energy stocks, it could be the S&P 500, it could be the Nasdaq 100, whatever. You have to define a group, and then what we do is using the point and figure chart. So if we go back to the gallery view, a point and figure chart, if you're moving above the prior X's, you're on a buy signal, and then you make a low, and as long as you don't break that low, you're still on a buy signal. So all of this chop in here was still on a buy signal until we got to here. And when we got to here, this was now a sell signal. When we got to this X, this was the first time we had a higher high. So then that became the buy signal, and we've been on a buy signal all the way up here until recently. In October, we started to make a low. The A stands for October, B for November, and C for December, and 1 through 9 for the beginning 9 months of the year. So in October, we actually made a lower low, and so this is on a sell signal now. So what do you do on a bullish percent chart? Well, what we do is we take all of the stocks in there, so in this case, all of the stocks listed on the Nasdaq, and we say, are they on a buy signal or a sell signal on the PNF chart? Well, if they're on a buy signal, that's positive, obviously. So that's a wide range, right? You don't actually start to really get onto a sell signal until you've moved down quite a ways. Here's the problem. We've only got 45% of the stocks on a buy signal. And typically, if you look across, again, we're at one of those levels where, for the most part, this is a place where we'd expect a bounce, not a place, unless we're really going to break down hard. Again, some of those exceptions, that's a better thing to watch for. So we're sitting here at 45%. But the other clue that we have on the Nasdaq is only 34% of the stocks are above their 200-day moving average. So in this wide group of stocks, only 1/3 of them are above their long-term average. So that's pretty weak. Now, obviously, the good news for us is the large caps are above their 200-day moving average. So when we go to the Nasdaq 100 here, 56% of them are above their 200-day moving average. And we've just bounced off kind of a low level, which is very typical to look for bull market bounces around. So we've already been down and back from the bullish percent perspective. And from the percentage of stocks being above their 200-day moving average, we're at half the market. Half of the Nasdaq 100 are above their 200-day, and the other 44% or whatever are below. So with that, we're watching to see how this resolves. So typically I would like to say we're at support, but the bigger issue is if we start to break down now, this is when we go down and we spend months trying to repair the damage that the market has built. So that's why this is such an important inflection point. Now, we've seen the commodity stocks hold up pretty well. I think the rise in oil stocks and some of the mining stocks have started to turn up. We're starting to see the commodities, I'll call it, lead for a while. That's been a change. And then the second component of that is we now need to see the industrials and the transports kind of get on board with that. So here's the railroads, and again, they're in a bit of a downtrend. They recently tried to rally up, but it would be pretty easy to draw a line across the top here and say until you've broken the downtrend significantly, we're not there yet. So we're trying to get above the 10-week and the 40-week moving averages on the rails, and this is the longest correction on this 5-year chart of the rails going down in terms of time. They've been falling since April or May, and now here we are in October. So you're getting this 5 or 6 month drop in in the rails. There's one period in here in 2019, but for the most part, it's usually 3 months and they turn around and start to move higher. So this is taking a little longer, and I will say that the PPO is right at zero, so if this was going to turn and burn higher, this would be pretty bullish. Again, the other thing to remember is that in 2020, we got to the end of October, things looked bleak, market was starting to drop, and then all of a sudden we reversed and went higher. But again, we had 2 or 3 different catalysts that made the change there. So these are all adding up to make the market tough here. And the reason it's tough, again, only 50% of the stocks are above their moving average on the large cap group in the Nasdaq, and then on the broader group, only a third are above their 200-day moving average. So that's a big deal. And then in terms of bullish percent signaling on both of those different groups, we're not at very high levels, but we have bounced off the low level that typically marks a bottom on the Nasdaq 100. So we want to keep that in mind. I will say when that bullish percent level breaks, it can spend a lot of time down here. Like for 2002, it spent almost the whole year with the majority of time under the 50% level. So that's pretty significant. This green line is where the level was on Friday. But the idea, again, is just to use those 2 general bread things that aren't going to help you so much with timing, but the idea is just to get an understanding of where the market is on a big picture time frame. And again, the bullish percent pretty weak, 50-50. And then when we get into the Nasdaq Composite, obviously a much weaker picture with only 30% above their 200-day. Okay, drilled that to death. Okay, so let's go down over into oil. And some of the people think oil's hit $80. It's now going to top out and roll down. Well, that could even be true, even if we just think that the floor for oil is in around $60 or $70. The one point that we need to make here is in 2017 and 2018, we had this period where oil and the oil stocks, the exploration and production ETF, moved up together. And when oil got to $75, this was way up around $165. So here we're at $80, and yet we're still barely over $100. We could easily move up another $60 and still be under the levels we were at in 2018. Now, when we look at this from a longer perspective, so some people are saying, well, even if oil tops out here, then the oil stocks will top out here. The thing is, their coffers, their bank accounts are just starting to fill up after the beating they took in 2020 when oil went below their cost structure, well below their cost structure. And if they sold oil, they sold it at a loss. And if they didn't sell oil, they didn't have any revenue to pay bills. So it was a real catch-22 for these companies for a period of time. Now, you can see back in 2020 when oil was up around $110, this chart was at $300. So if oil moves up $30 more, this chart could move up another 200% on an ETF. That's huge. So that's kind of the gap we're in here, is that the oil stocks are still relatively unloved to the price of crude because nobody believes the price of crude is going to hold here. I'm still of a different opinion where I think the price of crude has a lot higher to go, and there's meaningful reasons for that. We don't have to cover them off today. But the main one is just that, first of all, the environmental groups are working to try and make sure fossil fuel expansion isn't funded. So to put pressure to keep fossil fuels down, that's going to send the price of crude oil higher. And if that sends the price of crude oil higher, then all of the companies are going to make more money per barrel. Some people think there's a quick end to that. I think until we start drilling or digging for copper and doubling the grid, as Elon Musk suggests, we're probably going to be sitting in an energy shortage situation. And I don't know if you've noticed, but it seems to be that we're going back to natural gas, heating oil, and coal to all of a sudden make up these shortfalls. So while it was really important that we clean up the environment. The problem is we haven't done anything to kind of expand the grid to the scale that we need to in order to switch people over successfully. So we're in this catch-22 that we're trying to get rid of oil, but we haven't really got our head around having to dig more mines to make the world cleaner. Those two things just aren't really adding up yet. So with that backdrop, I still think this oil chart has a lot higher to go because oil demand is going to increase as we have a power shortage, as generators on buildings turn on, as states and countries move to natural gas to generate more power for the neighborhoods. All of that pressure on the fossil fuel side of things, I think, drives this up and gives us a reason to expect that as people start to realize how much money these oil companies are making, that this chart, even if it doesn't double, even if it just goes up to 175, that would just get us back to where we were in 2018. And again, oil's already there and probably going higher. So to me, the backdrop for oil still looks pretty good. Now, it's never today it looks great, tomorrow it looks ugly. It's kind of a bigger trend thing, and it can whip you around on any given day. I would just say that the chart in general looks extremely bullish, and the backdrop all the way through to whatever, let's say February or March, once we get through the harshest part of the winter for the Northern Hemisphere, we'll find out where crude oil wants to settle, and can we actually start to pile on any meaningful level of production to keep up with the change in demand. So that's my backdrop on why I think crude oil continues to go higher and why I actually think the stocks have a lot of catch up to do. Now, this chart at the top shows how those XOP ETF has done compared to the price of crude. When it's trending up, it's outperforming. Well, you can see it's been trending down. And even for the last 2 years, with the exception of a couple of weeks spike around the COVID outbreak, or actually I think it was when the price of crude plummeted and the oil stocks didn't go to zero with them, we've been trading in a sideways range. So we could easily start to break out of this range, and that would just get the party started, let alone actually have a meaningful worry about the price of oil. So I still think there's lots of upside there. Okay, so that kind of covers off the main things I wanted to talk about, but one of the other is lumber. And what I want to show on lumber, I'm just going to scroll to the bottom here. This is the wood ETF, and what you see on this wood ETF is we've been declining quite meaningfully since May, and we made a top in copper in May, we made a top in lumber in May. So, and you can see the volume came in, it was quite exceptional. Our PPO, our momentum indicator, is now back around zero, and this would be a common place to look for a reset where it bounces near zero and starts to take off to the upside. I'm actually not that bullish that that the wood ETF is ready to move higher. But what I do want to show, maybe I'll just scroll up to the top and just change it to summary mode here. What I do want to show on this lumber chart is that lumber has started to rise, and yet we haven't really seen the lumber stocks follow. So here's the question. We're at around 600. We were at 600 last week, and now we went all the way to 800. That's a full 30% move. And we don't see this spike on any of the lumber charts, but we are starting to see some of them pick up from the base. So let's just quickly look through. There's only 2 pages of them here, so it's a relatively quick drill. But what I want to show is, see, this is still trending lower, hasn't really started to turn up yet. It's got a base of 8 weeks. If this could start to turn, that would be something we'd look for. Here's the full stochastic trying to get back above 20%. Now, this one thing that's interesting about this, see how it makes a low here, and now it's made a higher low, and this is a low, but a lower low. The idea here is the lumber price doesn't continue to fall to the low end of the range anymore over the past period of time. It's sitting more in the middle of the range or at a higher level. So you get this, what we call positive divergence. And this was one of George Lane's favorite signals when he invented the indicator, when he started to get these higher lows while price made a lower low. These were some of his favorites. So you had a double bottom and then it would take off. So perhaps lumber's about to do that. When we go look at UFP Industries, this chart got a clear downtrend here. It's back above the 40-week and the 10-week moving average. PPO right at 0. Everything's starting to turn up here. Relative strength starting to improve. Wouldn't take much to get to new 4-month highs. That would probably attract a few new investors. So that would be quite good. Here's DBM.TO, a Canadian company, basically just humming sideways here. Looks like a buyout or something. Here's Glatfelter Corporation. This one's just drifting lower. Had a good week so far, the first couple of days of this week. But what you see here is a big downtrend. If that started to break, that would probably influence our decision to get long. PPO is trying to turn up here right around the 0 level, so I like to draw a trend line across the PPO when that starts to break. That's pretty bullish. When I look at Acadian Timber, this one's basically chopping sideways, hasn't had any real price action this week, sitting right at the 10-week and 40-week. I don't like a full stochastic rolling over around 50%. That's more bear market behavior than bull market for me. International Paper, this one's also trying to break that big downtrend, double bottom on the full stochastic. Relative strength downtrend for the last 3 or 4 months is starting to break. So this one looks like an interesting one. It's also one of the bigger players. Here's Weyerhaeuser, pretty big company, 28 billion. What you see here is it's actually made a big cup here, and it's starting to work its way higher. It's been moving away from the 40-week for about 6 or 7 weeks, but not meaningfully. Now, if it could actually start to surge, the PPO is actually crossed above 0, and that's usually a bullish place to look. Maybe this can go higher and follow some of that higher lumber pricing up. Here's Nina Paper. This one continues to be in a downtrend. Again, if it could start to break all of these trend lines, that would help. Full stochastic above 50%, usually a good place to look when that starts to happen. Resolute Forest Products tried to take off this week, literally pushing up to new 4 or 5 month highs, breaking the relative strength trend here up to 4-month highs. This stock has a really strong SCTR ranking, and it looks like it's starting to put in another move up. We're almost ready with a PPO cross above 0, so very bullish. Western Forest Products, again, same thing, building this big sideways pattern. If it could start to turn up here at all, that looks pretty good. West Fraser Timber, this is the Canadian listing. There's US one as well, starting to break out above 110, so that's new all-time highs, very bullish. Inter4, this one pushed up 3 or 4 weeks ago, but has just kind of flag patterned here. Want to see this start to rock. The full stock is already at the highs. PPO has already given us a positive signal. Again, we'd like to see that break out. If I was to compare these two charts, I'd take this one because it's ready to break out already. Clearwater Paper, this one's been climbing for 10 weeks already. Really nice look. Canfor Pulp Products, this one just breaking out to new 3-month highs. I like that look a lot. PPO giving us a buy signal. Pretty good. I already covered off the wood ETF. It's been gently in a downtrend. Again, this is the ETF for the whole group. If this was to start to turn higher, that looks pretty good. And here's Conifex Timber. This one was pulling back gently, trying to break above the kind of 3-month highs here. Any sort of break above $2 would get that done. And then Canfor Corp, one of the bigger companies in Canada. This one is sideways around the $29 level. A break here would be new 5-month highs and another bullish signal for us to get on board. Resolute Forest Products, I mentioned it on the Canadian ticker already, but this one's starting to break to the upside. Very bullish. Everything to like there. So once again, lumber's been in an uptrend. Most of the stocks haven't really started to follow it yet. I was wondering if they were going to just roll back over and this was going to be a head and shoulders top, but it looks a little more constructive than that. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV or StockCharts on demand. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.